Hi traders, Nick Shaheen here, recapping the week ending September 5th, 2014 and looking into next week. Seems like I say it every time. What an eventful week. But this one was scheduled to be eventful, right? Because we had a couple of Fed events going on around the world, and then we also had jobs numbers, blah blah blah, and the Draghi event. Him speaking is an event all by itself, aside from the decision. But anyway, tough morning for the bulls, but it turned around and closed yet another bullish week. And I put bullish in quotes, asterisk. I'll tell you a little bit later why. Well, the open was basically kind of whacked out because we came in with red futures into the U.S. Open, and but then we had the terrible jobs numbers, and the traders were kind of confused because I think they were expecting to sell good news. They were expecting good news, and then they were going to sell on the good news. But instead they got terrible news. The jobs was completely weak, under 200, and they were expecting way over 200, and now they're worried. So instead, they were forced to hesitantly buy bad news. It wasn't too convincing. The buying was not grabbing at it and ripping like we ended the day. And then President Obama sounded reassuring. He did the we have no plan to deal with the troubles in the Middle East. We're going to do this and this and this. And the point he was trying to drive home that we're all in the same boat, we as in the globe, that nobody's going to tolerate this. I'm not too sold on the specifics. He didn't kind of share any specifics. But it sounded reassuring, helped the markets kind of rebound, and then the VIX got crushed. The VIX is the volatility, or sometimes they call it the fear index. It got crushed. So what we're left with is yet another green day, and I'll show you here. And what to do next week, we'll talk about that a little bit later. So this is the intraday action. This is the S&P. For a while right here, I drew a line in the sand. I said we could turn around right here because it's like a rising wedge, and we did. But then we meandered until the close. The close was we basically got some positive Fed speak late in the day into the close, and we also had Alibaba IPO announcement pricing something like $66 or something. So it's just the mood was positive, and we closed on yet another all-time high in the S&P. So looking at the S&P, speaking of, this is the SPX representation of it. I thought that it had a roof to climb over here, which has been here for a while. And this week we knew that the fight was at the 2000 level. It wasn't really sure. As a matter of fact, within just minutes of the close, this candle was red. And it needed to be over 2004 and change to be green, and it was a red doji, which is an indecision candle, still kind of indecisive, but a bullish one because they left the tail behind them, kind of like they tried to sell it out, but then so going into next week we should have positive momentum. We maintained the uptrend, I should say. See how it's nice and solid. But if it had been red, then it would have caused some people to say, "Oh, you see, now we've had 4 positive weeks in a row, and an indecisive red candle. Therefore, chances are Monday might be whatever." I think we'll buy Monday a little bit because if the world doesn't end over the weekend, we get no bad news, no major headlines, then the open should be biased upwards. So the plan for next week, I'll jump into it and then we'll backtrack to see how things did. The plan for next week is to trade the range, continue trading the range. I say that loosely. See those green things I drew? That's kind of a range we've been trading. So you need to find your range, and I'm going to challenge my range next week and revisit all of my trades. But I still favor going short midterm. So I don't want to go short like tomorrow or next week. I want to go short, but leave some room, leave some slack to be wrong, leave some room for error. So kind of like wearing a seatbelt as opposed to going racing without seatbelts. So that's my preference. You can trade your ranges however you want, and I'm going to continue taking some short positions and some long positions to hedge them whenever needed. I don't hedge every position, only when I think I need it or may need it. Okay, a couple of stocks that were in the news today. Tesla for sure, red, really red. I think was down almost 4% at one point, closed down 3%, but that's on an a record day. That's not good for Tesla. So I may pick on it. Why? People said, well, because Elon said that it's stock, and he did. That's the second time he does that, by the way. So this time he knew what he was saying. It's not like he slipped. And he's too smart to do that. So he said that he thought that his own stock price was high. So that caused it. But he also said something else that I picked up on, and that's why I think it can be picked on next week. He said that he's more concerned about he chose wherever they're going to build the the factory, the Gigafactory, because not because it was the best financial deal, because it's the one that promised him to finish on time. So he sounded like a man desperate to get his factory online because so much is riding on it. And I forget the words, but it sounded like, if we don't get this online, our sales are going to hurt because we won't have enough batteries, kind of a deal. That's what I heard. You can read it and see if you see the same thing. But if more people pick up on what I heard today, next week will not be positive for Tesla, I don't think. So I may choose to pick on it via puts. I don't have any puts on it today. Speaking of puts, I did have puts on Priceline into the open, lucked out, bottom for 55 cents, 70 cents, 80 cents, and then they were 12.50. I didn't sell them at 12.50. I sold them somewhere in the middle, so I profited nicely. But that's a stock that got hammered today. And I think because of somebody came out and said, I don't like it anymore. There is danger of more penguins jumping into the water and following suit and selling. And today's scandal was pretty sizable for Priceline. But eventually, that's a knife I'd like to catch. It's a momentum stock. Catching that knife could hurt, but it's a good company. So if the markets hold up, it will rebound. It's just a matter of picking your spots and how to catch it. Again, I will do it with midterm, meaning I'll leave myself some room to be wrong. Plenty of ways of doing that. Pick your poison. This was it. That was the recap. This is the SPX, S&P 500. The Qs were almost, the Qs and the small caps were kind of in the same boat for me the last few days. I was looking at them short-term trends, but again, they're all rising wedges looking, but that doesn't matter since we keep buying them up. What's important today is that the small caps did not lead up, and that always worries me. And this is the small cap for the week. Not a green candle, obviously. And that's a basket of 2,000 stocks, so I tend to listen to them. Remember what I said about the S&P, green, red doji. So I should remember to shut the phone. Like I said, I should have remembered to shut the phone down. That is a not a good candle, I tell you. What's going on today? Too much caffeine. Anyway, that's a point of caution. So I'll leave you with that. Test your theories. Don't assume you're still correct. And I'll touch base with you next week.